Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this, where are we, Tuesday now, on the 19th of June, 2018. Sometimes I don't know where I'm at. And you can see these are all the settlements. And I want you to look at the sea of red behind me. All the stock indices down, all the metal markets down, the dollar up, currencies on a settlement basis, all down except the yen, the major currencies. The Mexican peso was a little, I think, stronger today, too. Energy's backing off. OPEC talks. By the way, the OPEC meeting has actually begun. People don't realize that. Began today. It goes 5 days. The big boy ministers come in on Friday. But already we're hearing talk that Iran, Iraq, Venezuela, they don't want to see any type of increase in oil production. Of course not. And the other big boys, the Saudis and the Russians, look like they do. So where's the moderation going to come in? That becomes the question. I can't tell you if we're going to see more production or not. I can tell you that I'll bet they're already producing more out of Russia and Saudi Arabia, and I'll be surprised if we don't see that in the IEA numbers out of the Saudis, and I'll bet that a lot of that oil's on the high seas already. That's my instincts on it. The market's basically lower there. The biggest problem people are having is not using the correct term. We are in a trade war. Google it. Don't go by what I say. But when one country puts on a tariff and the tit for tat is another country puts it on, as China's doing, and they keep going back and forth, the definition is a trade war. And why the big-time TV stations are scared to call it that, I don't know. But that's what you're in. How does it end? It ends when both sides feel enough pain and they start talking, because in the process, they both hurt each other. We're watching the U.S. farmer get annihilated in his grain prices. We're not seeing it in meats. We are not seeing it in the stock market. You do realize that while the Dow is down like 0.7 or so for the year, all the other indices are higher, and the Russell again went for an all-time high today. So the world hasn't ended for the U.S., but the question is, with the president surrounding himself with his hawks, they think the time is right, that if we're ever going to attack the tariff issue, it's now. My job isn't to say if that's right or wrong. My job here is to just point out what's going on. When I take a look at the weekly area chart of closes in the S&P, as I told you, I thought the 62% mark could be a stall number. I'll pat myself on the back. It's turned out to be a stall number. That doesn't mean you can't take off from here. In fact, here's something. If we woke up in the morning and all of a sudden the press said China and the U.S. are talking, want to put an end to these trade wars, what do you think the markets would do? Be willing to make a pretty big bet. They'd rally pretty sharply. We're not at that point. And you do realize the next round of tariffs don't even come in until July 6th, and then the round that the president's talking of this other $200 billion, I don't even know a date on that. They have to make a list. China can't keep doing more because they're putting tariffs on literally everything they import from us. So they're through with that. They don't have any way to go. They can do embargoes. They can make business terrible for American businesses there. They can devalue their currency. They could shoot themselves in the foot and sell American debt. Those are the things they can do. The choices aren't great. So at some point, everybody's got to say, okay, we've seen that you're willing to stand up, being either side, let's sit down, and unlike the last time, let's make progress. The $70 billion that you offered us, China, it isn't going to cut it. That's the starting point. We'll see if it goes anywhere. When you look at how the market broke down, you see the correction, but I don't think you'd call this a crash in any manner. You've had a correction in the S&P where you got a higher high and a lower low. The market's trying to hold the 18-day average of closes. When you look at the Bollinger Bands, they are starting to flatten out. We've expanded a trading range. And in momentum, what bothers me is you've lost the upside momentum. When you lose the upside momentum, price often returns to the 18-day average. Duh. You're there. All happened today, same day. In the NASDAQ, you still have the bullish momentum. You haven't seen the red line close under 80 the way it did for the first time in the S&P. The market came down, tried to hold, it went to 71.57.5, made a run for the 18-day average, didn't quite get there, and it held. The Dow has been the weakest. It actually led the parade to the downside. I didn't think it would, but it did. It lost its embedded reading way back here. It also hit its 18-day average. Then it tried to play around, and this is yesterday at the 100-day, and today it's trading between the 100-day and the 18. It's still paying attention to moving averages. Should the news get worse, what do you think the next number is that it might make a run for? I would guess the lower Bollinger Band. The news tomorrow is quiet or better. Maybe it makes a run for the 18-day average again. There's nothing on the chart in terms of a pattern that's bullish. There's also nothing bearish. When you come to the Russell 2000, fully embedded reading. So the two markets that have held on the best are clearly the NASDAQ along with the Russell, and the powerhouse is the Russell. It just keeps going for the contract highs. In the VIX, you started stalling out again at this 18-day average of closes. Had it gone up to the upper Bollinger Band, and it might, I would still look, like I've said before, for the pros to start selling the calls up there, just the way I had been telling you. I'd be surprised that they're not selling the puts. Momentum, if we look at it, this was yesterday. Today you lost the embedded reading. When you do, you normally go to the 18-day average. You're, for all purposes, there already. Hard market to call. In the bonds, momentum is pointing up. The market has... Remember I told you this pattern I can't figure out. It all comes from here. Here you have an outside day down, and then you take out that day's high. Whenever that occurs, I always tell people I don't know if this is the swing line low. And when I don't know it, I wait for the chart to restructure, and I am. I'll use it temporarily, but I'm not saying that the swing lines are up. I'm saying that the market made a run for the upper Bollinger Band, seems to be faltering there. Support back at the 18-day average, which is still over the last break low of 143.14. I can make a better argument on the 10-year notes because you didn't have that pattern. Higher lows, higher highs. The trend gets broken if you take out 119.18. Barring that, if the market holds the uptrend, you have resistance at 120.18 and support in two spots. The combination of the 100-day average and the 18, and no, you did not have a bullish crossover. You did not get the 18-day over the 100-day. In TLT, you've got the higher lows, or do you? Let's come to this day. You have an outside day down. I'm in the same predicament I was in the bonds. I don't know where the swing line low is. This is a market that obviously is trying to move up. Will it get resistance here or see the support between the 18 and the 100-day average? When you come to the dollar index, I always look to see if a market has an outside day. If it does, if you take out today's low by Wednesday or Thursday, my rule of thumb, doesn't mean it's somebody else's, is that that is a bull trap, and the market often makes an attempt to retrace to what I call that line in the sand, the 18-day average of closes. Momentum is overbought. You've hit upside objectives. When we come to the eurocurrency, we had a day, if we look at yesterday's range, 116.44.5 to 117.05. I'm going to go back to yesterday's low. You took out the lows and the highs. So you have an outside day down. Remember I said these are mirror images, the dollar and the euro. Take out that high of today, and I wouldn't be surprised you get to the 18-day average and you're oversold. In the British pound, you're still with lower highs, lower lows, still in a lot of problems, trying to ride the Bollinger Band down, but you're oversold, not embedded. In the yen, the market negated the downtrend, went back, stopped at the line in the sand, that 18-day average. The market is in an oversold condition and trendless, as I'll call it. Bitcoin, remember, I said you're correcting an oversold condition. You're getting a bit of a rally here. If you can put any legs to it, the 18-day average should be the resistance. You would not want to see this market back under the 63.40 level. When we come to the Brent versus the WTI crude, the spread's widening a bit because this OPEC meeting has nothing for all purposes to do with WTI crude. It's going to be all about what do they do with the Brent production. Are they going to increase? Are they going to hold where they're at? That's the big question for the market. So you're getting a little bit of a bounce off the Bollinger Band the past day or two. And the question is, what do you do up at resistance at 76.20? In the WTI, you have a market that's got a higher high and lower low. And as I've pointed out, I think the 100-day average is where the market's having the problem, not the lower Bollinger Band. And I think it can trade between the 18 and that until it decides what next. Gasoline market stuck between the 100-day average and the lower Bollinger Band in an oversold condition with, again, a higher high and lower low with downside bias to it. And in nat gas, I warned you, I said weather is the problem. Trading gas at this time of the year, if you hold the position for an hour or two, I give you credit. It's a hard market. And you failed at the upper Bollinger Band. Now with the cooler weather, Chicago's going to be, we were 97 this weekend, breaking or hitting all-time records. Even yesterday was unbearable. Today's absolutely gorgeous, and the next 6-7 days are like that. That weather moves northeast, pulling back as that comes in. So that's what I'm seeing in these markets. Now, I'm holding my live webinar on Thursday. If you didn't receive your invite, here's how you can get in. And it is free. It's at 12:30 p.m. You come in via the internet, you write your questions, markets you want covered. I do my best to cover it. Call my staff, or you can click up here if you're watching me on YouTube. It'll take you right to the invite, sign up. It's first come, first serve. There's only a limited amount of seating. And even though you sign up, you got to get into the chart room before, or chat room as I will call it, before everybody else does. So let's see what happens. I'm Ira Epstein. You have a great day. Hope to see you on Thursday, and of course, see you tomorrow.